Hi everyone, I'm Serena and I'm the lead market analyst in Vortexa. Today we'll be analyzing China's clean product exports using the Vortexa software development kit. The SDK is a fast and programmatic tool that allows users to extract Vortexa's cargo analytics, and it's been gaining popularity among analysts as well as data scientists because it allows them to manipulate these large data sets into the custom analysis that they would like to perform. If you're new to the Vortexa SDK, we've written the documentation in the Vortexa SDK GitHub. We encourage you to have a read after this session. So, all eyes are on China's clean product exports these days because demand recovery within the Asia-Pacific region has been relatively fragile, and any rise in exports would add to the oversupplied market and weigh on regional product cracks. In recent months, Chinese refiners have ramped up their crude runs. But the question is, has domestic demand matched up with rising production? And what does this translate into in terms of exports? So in this two-part series, we'll first look at how much Chinese gasoline, jet, and diesel has been exported every month up until August. We'll then analyze the top destination countries for these exports and what do these trends tell us about demand recovery of the import markets. So to start off, I've imported some of the libraries as well as the Vortexa SDK module that we require for this notebook. I've written some helper functions such as renaming of the columns as well as plotting of the charts that will come in handy later on. So let's start. Now the first step for us is to define the start and end timestamp for our analysis. So 1st of January 2020. And the end timestamp would be the current date and time. All right. Now the next thing is for us to extract the unique ID for China. In the Vortexa world, every geography, from the highest of the geographical region to the lowest of terminals, has a unique ID assigned to it. So to do so, we'll use the geographies endpoint in the Vortexa SDK module. We'll check that there's only one ID that has been returned. Right? Now the next step for us is to define a list of products that we're interested to analyze. So in this case, we'll be looking at gasoline and blending components, arrow, as well as diesel gasoline. Right? Now, once we've done this, we are ready to extract the cargo movements for all the cargoes originating from China, starting from 1st of January through to the present. So to do that, we'll use the cargo movements endpoint in the Vortexa SDK. Right, so let's have a look at the results. So here we have a data frame with 674 columns of the cargo movements details. So it consists of information on the quantity in barrels, the vessel name, the product, the origin and destination, the departure, as well as the arrival dates, and any STS details associated with the cargo movements. Now from this big complex data frame, we're going to reduce this to only the columns that we require for our analysis. So I've defined a helper function previously to help us do that. So I'm going to first rename some of the columns. I'm going to extract the relevant columns that we need. Right? So now we have a new data frame. The details of the cargo movements in terms of the vessel name, the product, the quantity in barrels, the origin country, the departure date, the destination country, as well as the arrival date. Now, the next thing for us to do is to aggregate these cargo movements and their quantities by product as well as the departure date. But because we want to look at the monthly exports, we need to aggregate this in terms of the month and the year itself. So to help us to do that, I'm going to create a new column within the data frame called load month. Right? So here I've added a new column called load month based on the departure date. Now with that, we're ready to aggregate these cargo movements table by the product as well as the load month. So I'm going to convert the units from barrels to million barrels. Round it off to 3 decimal places. Right. So here I have a data frame for the monthly exports based on products and the quantities in million barrels. I want to filter for this in this table for all the relevant products that I'm interested in, namely gasoline, jet, as well as diesel. I'm going to pivot the table. Right. So here I have the data frame of Chinese gasoline, jet, and diesel monthly exports from January 2020 all the way to August. And let's plot the chart for this table. So we're going to use a helper function that we previously defined. Right. So first of all, I'd like to highlight that the August numbers are our preliminary numbers. So these are the cargoes that have loaded out of China and have declared a final destination outside of China. So as the month progresses, we could expect to see these numbers continue to rise. But this shouldn't change the story too much. So if you look at this chart itself, the blue bars represent gasoline, the orange bars jet, as well, and finally the green bars diesel. Now, on an overall level, China's clean product exports have been relatively strong in the first quarter of the year. That's because refinery runs were relatively robust, but at the same time, domestic demand was falling because of the spread of the pandemic. In the second quarter, the refineries started to cut runs, and this was when the exports was actually moderated. Now for China, the turning point came in May. This was when the refinery runs were low, and at the same time, the country saw a recovery in terms of the condition of the pandemic. So domestic demand started to rise. But at the same time, regional exports demand was relatively soft. So the refiners, the domestic refiners, decided to sell most of their domestic cargoes within the market itself instead of exporting them. And as a result, we see one of the lowest clean product exports from China in the month of May. Now, beyond this, in recent months, we started to see a pickup, an uptick in terms of the exports volumes. Now, what's happening is that refinery runs have started to ramp up, but domestic demand has not yet caught up as much. So because of that, there is a growing surplus within the country that needs to be exported to the region itself. So if we look at gasoline, which is the bars in blue, we see a rise in gasoline exports. And that's because within July itself especially, the massive floods have actually hit and hampered a lot of the travels, and therefore stalled the gasoline demand domestically. So with that, we see a rise in exports. Now, there is an upside in the months leading up to the Golden Week, where we expect that gasoline demand will rise with increased travels. For jet, the exports have been relatively low, and that's because both regional and international jet demand still remains very soft on stricter travels. In terms of jet cracks, there has been a recovery in the recent months, but as of last week, we saw that jet cracks turned into the negative again, reflecting the very soft sentiment within the market. In terms of regrade, which is the price spread between jet as well as diesel, regrades remain negative, which gives refiners incentive to blend jet into the diesel gas oil pool. And finally, for diesel, exports have been rising, and in fact, exports have risen very steadily all the way to at least 10.8 million barrels in August itself. And this is because the massive floods that hit in July actually hampered a lot of the construction activities, coupled with the fact that there was a summer fishing ban that prevented the fishermen from fishing. So because of that, there was a huge stock build, and refiners are now destocking the market, and that led to the ramp up in terms of diesel gas oil exports. Looking forward, we expect diesel gas oil demand domestically to rise. That's because construction activity within China seasonally is the highest in September and October, coupled with the moratorium on the summer fishing ban that could further boost the diesel gas oil exports. So what we see over here is the rise in Chinese clean product exports. But if refinery runs remain relatively stable, coupled with the rise in domestic demand, we could expect that exports could hold steady or have an upside, with the upside kept at the current levels. So this marks the end of our first session. And in the next session, we'll look into China's top product exports by destinations. And we'll look into what these trends actually mean in terms of demand recovery from the import markets. Thank you, and we'll see you soon.